Hi, I'm Bill Wilt of Assured Research. Thanks so much for joining this quick hit video where we focus on one research note drawn from our recent Assured briefing. That's our December 2024 Assured briefing. If you're a subscriber, thank you, and you'll have access to the note and this recording. If you're not a subscriber, but you find this interesting and other content at our YouTube site, please feel free to reach out. We'd be happy to start you on a free trial to our work. This note is on the excess and surplus lines marketplace, specifically calling a top to the rate of growth, that incredible rate of growth that was experienced over the last several years now in the E&S marketplace. Before we get into the slides, offer this admission with some frustration on our part that we didn't do a good job of calling the or recognizing in the earliest of days the potential for the incredible growth that's been seen in the E&S marketplace really since kind of the late 2010s. So guilty as charged in that Assured Research didn't scream from the rooftops in the late 2010s that the E&S marketplace was ready to explode. And here we are saying, hey, it looks like the rate of growth is passing its peak. That really isn't too far. We're not really going out on a limb there. Lots of executives in the E&S marketplace are, in fact, kind of trying to guide investors, for instance, toward the what would they refer to as more normalized growth rates, kind of in the 10 to 20% range. So with that main message framed, allow me to share my screen, and we will jump into a few slides. And I'll invite you to, as I say, reach out if you'd like to learn more about our research or receive this note as part of a trial to our work. So have just two slides to share with you, really looking at the history looking at the history of the E&S space. Incredible growth. Looking at the left-hand side, grew out of the 9/11 hard market, but then receded, and really kind of in the late 2010s, 17, 18, just incredible growth. The last 10 years, 13% compound average growth rate in premiums, basically double that of the industry largely, or commercial lines industry. Another way to look at it is E&S premiums as a percentage of commercial. Almost 100%, 90 some plus percent of E&S premiums are commercial. So when you relate it to the commercial premiums, you see it was kind of flat in the 10% range through the early part of the 2010s, and then kind of 17, 18, 19, it really started to grow and is now reaching 20% of total premiums. But there are a few points that we make in the note beyond just observing, hey, we think the best growth rates trajectory is in the rearview mirror. One is we looked at the four largest states that you see there: California, Florida, New York, Texas, account for 50% of premiums. Just interesting to observe as we move. You kind of within each state, you move from right to left. So the green is 2005 premium. It fell in at least in in two of the four states, premium fell. Overall across the E&S marketplace, it was flattish from 2005 to 2015. But there you see the incredible growth when you go from 2015 to 2023, excuse me. But what's changed also is the structure of the E&S marketplace. Premiums are up substantially, but so too are the number of E&S writers. And that's what you see on the right-hand side, the number of companies. The number of companies fell across these four largest states, kind of in the upper single digit, low double digit range from 2005 to 2015. But look at that, 50+% increase in the number of companies when you go from 2015 to 2025. What that tells us, or at least raises the question, is as the growth trajectory slows and maybe rates start to come off, as was widely discussed, they have in the property component of E&S. What's that mean for the nature of pricing competition? There's certainly a lot more mouths to feed in the E&S space today than there were 10 years ago. Will the number of companies shrink? I think we counted some 60 plus new companies over the last 8 to 10 years. Will those companies shrink? Will they move into other areas? It's difficult to know. So we raised that question in the research note. What does growth in companies, how it'll influence the E&S pricing cycle and growth and profitability dynamics? And the other question we raise in the note is, with so many formerly, in air quotes here, standard companies now having oftentimes very meaningful E&S capabilities, raises the question of whether the characteristics of those companies are going to be formerly E&S and formerly standard, whether those characteristics are going to start to blur because so many companies have both capabilities. There's more in the research note. We'd encourage you to reach out. As I said, as part of a trial, we'd be happy to share it. And we're going to watch the E&S market more closely in the quarters and years ahead, with the hopes of not missing the next big move, whether it's up or down in the E&S space. Thanks for listening. I hope you have a great rest of your day.